guys, today's live discussion, okay, on activity 23.4. Get your textbook, page 287. Okay, let's discuss. Alright, first one is on performance ratio for 2012 and 2013. So we have to find out for 2013. Okay, let's use the table in 23.2, okay, to calculate the profitability ratio for 2013. So for 2013, your answer should be 48%. How do you get 48%? Okay, 240 divided by 500 times 100, you get 48%. Remember the table from 23.2, yeah? Alright, for profit margin, you should get 14%. How do you get 14%? Is 70 divided by 500 times 100, okay, 100%. So you should get 14%, 1-4. Alright, for capital employed, okay, capital employed formula should be return on capital employed is equals to profit divided by capital employed times 100. So the capital employed for 2013 is 120. Okay, profit should be 70 over 120 times 100. You should get 58.3%. 58.3%. Okay, let's go to question number 2. Okay, question number 2 says on using your results, comment on the financial performance of TT in 2013 compared to 2012. Your answer should be gross profit margin has improved, but not the profit margin. Okay, it has improved but not the profit margin. So TT should or you can suggest TT has not controlled overhead costs as well in 2013 as in 2012. However, TT is more efficient in use of capital because capital employed has increased. Okay, that can be for your question number 2. Okay, let's go for question number 3. Explain how the following stakeholder of TT might view these results. Okay, as a shareholder, okay, the more profit for the company, right? If the profit increase, of course, the increase would be in dividend, okay, of market value shares. Okay, so you can say, please, the shareholders are pleased with profit has increased because this would increase dividend and market value of shares. Okay, 3B, employees. Okay, if there's increase in profit, of course there will be increase in wages. So you can say increase in profit margin might mean an increase in wages for employees. C, suppliers. You can say if there's an increase in the business, of course there will be more orders. So you can say revenue increased. If this is because TT has sold more goods, then suppliers will be pleased because they will be supplying more goods to TT. And D, government. So there's increase in profit, of course you have to pay more tax, right? So increase in profit means increase in tax revenue. So there's more earnings in the country. Number 4. Okay, based on the information, do you think bank would lend money to TT to finance expansion plan? Justify your answer. Okay, like for here, bank will, you can say, bank will want to know if TT is making enough profit to be able to pay the interest on the loan and also to repay the loan when due. Although profit margins have fallen, return on capital employed has increased. So suggest that TT is using capital efficiently and is more likely to use any new capital such as efficiently. Okay, so bank will want to see how TT thinks plan will affect future profit because before lending money, yeah, they have to see their future profits. So because otherwise it will be a risk for TT as well, and as well as the bank, okay, will probably lend the money. So might want non-current assets as security against borrowing. They might ask that, or you can suggest for bank overdraft, which is shorter term, and also you can pay within 1 year. All right. Okay, that's all for 23.4. Okay, we will go for the next one now. All right, next one, 23.5. Okay, let's look at the first one. Using the data in table 23.4, calculate the liquidity ratio for 2013. Okay, let's look at the table 23.4. The table here 2012, but we have to calculate 2013. Okay, what is the current ratio for 2013? Okay, what is the formula? Current ratio, current assets over current liability. So current asset is 50, divide by 30. So you should get 1.7 is to 1. Okay, acid test ratio. Okay, the formula for acid test ratio, current asset minus inventory over current liability. So current asset is 50 minus inventory is 30, divide by 30. So 20 divide by 30, you should get 0.7 is to 1, because like what I told you, the general rule, the current ratio must be no less than 1.5 is to 1. Okay, so the ratio should be is to 1. All right. Okay, next one, number 2. Okay, using number 2, using your results, comment on the liquidity position of TT in 2013 compared to 2012. So you can say liquidity improved. Yeah, liquidity position improved if the current ratio is used as a measure. However, when inventories are deducted from current assets to show the most liquid assets, liquidity position worsened between 2012 and 2013 because the acid test ratio is now 0.7 is to 1. So that is for every $0.7 coming into TT is spent as $1. So you can say that, yeah. Okay, let's go for question number 3. Explain 2 ways of improving TT's liquidity. Okay, of course, you have to reduce inventories. Yeah, the way 1, you can say reduce inventory, recover money owed from trade receivable. This is way 2. Okay, more quickly, example, offer early payment discounts to credit customers. Okay, we are done with question activity 23.5. Let's go for 23.6. Alright, the first one, calculate the gross profit margin and the profit margin for both years. Okay, let's look at gross profit margin for year 2011. Okay, the formula for gross profit margin is gross profit over revenue times 100. Okay, so let's look at 2011. Yeah, gross profit margin for 2011 is 114217 divided by, okay, the revenue is 1162340 times 100%, you should get 9.8%. Okay, gross profit margin for 2012 is 117998 divided by 1328,300 times 100%, you should get 8.9%. Okay, that is for gross profit margin. Okay, for profit margin, your formula should be profit over revenue times 100. So the profit margin for year 2011, can you see profit there? 56002 divided by the revenue should be 1162,340 times 100%, you should get 4.8% for 2011, and for 2012 you should get 41458 for 2012 here, divide by 1328300. Okay, the profit is 41458 divided by revenue 1328300 times 100%, you should get 3.1%. Alright, let's look at question number 2. Calculate the return on capital employed for both years. Now, the return on capital employed formula should be profit over capital employed times 100%. So, ROCE for 2011, okay, let's look at the profit first. 56002, capital employed for 2011 is 53670. So 56002 divided by 533670 times 100%, you should get 10.5%. And ROCE for 2012 is 41458 divided by 590000 times 100%, you should get 7.0%. Yeah. Alright, so let's go to number 3. Using your results to question 1 and 2, comment on the company's performance in 2012 compared to 2011. So your answer should be all three ratios indicate that the company performed less well in 2012 than 2011. Yes, correct. Okay, so it performed less well in 2012 than 2011. Number 4, calculate the current ratio for both years. Okay, for both years of current ratio, okay, your current ratio formula should be um, current assets over current liability. So current assets here is for 2011 is 805394, divided by current liability is 784856. So answer is 1.03 is to 1. Okay. Current ratio for 2012 is 1087365 divided by 1066017. Your answer should be 1.02 is to 1. Alright. Number 5, using your results to question 4, comment on the company's liquidity in both years. Now, company's liquidity in both years, let's look at both years. So liquidity position in 2011 is not very good because the ratio should ideally be between 1.5 is to 1 and 2.2 is to 1. Okay, however in 2012 liquidity position is worse, had worsened as the current ratio has fallen to 1.02 is to 1. So results suggest that the company may have cash flow problems. Okay, all right, we have done activity 23.6. Now let's go to test yourself. Okay, test yourself. Okay, let's go to the first question. State the formula used for calculating gross profit margin. Okay, gross profit over revenue times 100%. Number 2, state the formula used for calculating profit margin, profit over revenue times 100%. Number 3, state the formula used for calculating return on capital employed, profit over capital employed times 100%. Number 4, state the formula used for calculating the current ratio, current asset over current liabilities. Number 5, state the formula used for calculating the asset test ratio, current assets minus inventories divided by current liabilities. Number 6, is profitability more important than liquidity? If not, why not? Okay, so here you can say liquidity is cash, right? So without cash, a business will not be able to pay its debts and will not be able to survive. So in the long run, a business must be able to earn profit to survive. They are both important, but in the short run, cash is more important than profit. So in the long run, profit is probably more important than cash. Alright, so both are equally important actually. So number 7, explain two disadvantages. Limitation means disadvantages of profitability and liquidity ratio. So you can say only useful if comparing results over time or between companies. Different companies prepare their accounts using different methods, so direct comparison might be misleading. Alright, that's all for today. Alright, hope it has complete your consultation with me. See you all. Bye bye.